Hey, what's up, everybody? Zach is back with another episode of Journey to $1 million. And today was another bloody day in the markets, but we are strong and we are going to keep holding our long-term positions and dollar cost averaging into even more tasty positions. So, as well, today we're going to talk about why the markets are down. I would like to talk about specific plays that we can do, and also I want to make a bull case for Tesla and add another one to the watch list. Now, if you were on the live stream earlier today, you will probably know what we are going to be talking about specifically in terms of the stock. So guys, go ahead and make sure you are subscribed to the YouTube and turn on those notifications so you know when we are live streaming. Don't want anybody to miss it. All right. So first of all, let's go ahead and take a look at the market's overview. S&P 500 was down about 0.4%, NASDAQ was down about 0.7%, and Dow Jones down about 0.3%. My portfolio specifically was down 2.28. At this time, I took this screenshot, which was still the after hours was open a little bit, but something like that, about 17,000. But our notable picks from the official watch list today, some that went up was including HOL was up 8.5%, ACIC, which was that flying aerial vehicle play, and that was up 7.5%. So our shares just keep appreciating that we had been dollar cost averaging into. And of course, CCIV keeps on chucking up a little bit. Again, for CCIV, I would start taking profits, dollar cost average into your profits, but pretty much now. It was 2 days straight now the markets have crashed, so let's go ahead and real quick take a look at, let's go ahead and take a look at the NASDAQ. So QQQ, just to make it easy. So as you can see, it was actually coming back up a little bit, but it did take a dip. And this is pretty similar to what happened 2 weeks ago, and also not very far away from what happened what was that, in early January. So these things happen, guys. This is not a pending market crash, although it could be. Who knows? Maybe we should buy a little bit, buy some small hedge positions, which we're going to take a look at anyways. But in my opinion, I don't think that this is going to be a market crash because we're still coming up on the stimulus. Things should be returning back to status quo in terms of travel and in terms of coronavirus, and we got all the vaccines rolling out, and that should only be on the up and up. So I don't believe that this is a market crash. Let's take a look at the SPY. So and the NASDAQ was the one down the most, and so this one didn't even dip that much. But if you had gotten into maybe some QQQ or maybe the semiconductor SMH, shaking my head, while it was at its bottom, it could have been really interesting for you. But let's just say we're super terrified that the markets are about to crash. What should I do? Should I sell everything? Should I just stay in my bed and don't come out? You know, to be honest with you, the markets will eventually crash. But that's not something that we should be so scared of and panic. Because in 2008, the Dow Jones lost about 50% of its value. But you know what? It only took a little more than a year to come back up and fully recover. And that was in 2008. That was pretty hard. That was when I was just starting out after college and trying to get some jobs, and there was no jobs. That's what really got me into trading and investing. So thank you, market crash. Market crashes are not necessarily bad things. If you have some cash on the sidelines, we can really take advantage of that. Just like in the COVID dip. I was dollar cost averaging into a lot of positions. But you know, down 50%, and in a year, a little more than a year, it recovered fully. So in case you guys urgently need this cash, maybe you should keep some cash on the sideline. Could be the smart thing to do. Keep 6 months of expenses. If you're paying rent, if you're paying your mortgage, if you need to buy food, obviously. So keep about 6 months of expenses if you're one of those persons, one of the doomers that think the market's going to crash. Now, there's some things that we can do. We can buy some hedges, just some really cheap insurance, just in case. And I'm going to show you guys my opinion of what we can do preemptively right now to kind of have a cheap insurance policy. So let's go ahead and take a look at that. But again, I don't think this is actually a small dip compared to the one last week. When was that? It started on the 26th of January, so that was, it was a couple weeks ago. But you guys get the point. This one is actually pretty small. Of course, the semiconductors are probably down even more because those are really killing my portfolio. But again, it's coming up to a support here, and it's not as bad as the January 26th dip. So these are all healthy things. It's been running up, and don't forget the frozen tundra of Texas could be affecting this a little bit. And also, I think that the jobless claims were, the data that came out today was not super good. But again, it wasn't super bad. It's still COVID. I wish things would continue on the up and up, but hey, it is what it is. So it's a good buying opportunity. We're buying a lot of things. If you're following along on the Twitter, link in the description. If you're following along on the live streams, go ahead and turn the notifications on and subscribe to my YouTube. You guys are going to know what we're doing in the plays that we're trying to make. But anyways, let's go ahead and take a look at this hedge that I keep talking about, but I keep getting sidetracked on. So let's just say your portfolio is heavy in tech. Maybe you've got the triple Q long-term positions, which I do. I'm buying and holding. Possibly you got some leaps on some tech because QQQ is just heavy tech. So let's just say you have a heavy tech portfolio and you want to take some cheap insurance policies. Go ahead and head on over to the options. Make sure that is on puts because we're going to be buying some puts, and go a year and a half out. Let's just say you could go March 18th, 2022. So that's about 1 year. Let's just take a look at that one first. But we can decide, and no, we don't want it on Condor. We want it on single options. And remember, guys, keep in mind, this is Webull, and I really like Webull. I'm really starting to like it more and more, but we were actually doing some Condors earlier today. I got into a Condor with AMD, but it's just very nice, and it has a nice graph. So, guys, check it out if you want to trade with us, or if you just want to use this for your research, because it is very good. It's got all the news right here, got the analysts, what they say, financials. Obviously, QQQ doesn't have any of those, but you guys get what I'm saying. So go ahead and link in the description. You're going to get free stocks anyways. If you deposit $100, you could do a 20 to 40% ROI on your $100 just if you sign up for Webull. So go ahead and check that out, guys. Link in the description. So let's just look at this. So let's just say I want to get a put for triple Q because that's tech heavy and it's NASDAQ, just generalized the NASDAQ market and tech heavy. So if that's what your portfolio is, let's go ahead and look at this. So let's say I buy a put around 170 strike, and of course that's way out of the money. I'm aware. So let's just say I do that, and the last price it sold was 317. So I don't want to do 6. I want to do maybe, let's just say 3. So for $300, I'm gonna buy the put for 170 strike. Now, probably we're going to lose the $300 because I don't think the market is going to crash by. That's a little bit less than half, but it's almost about half. What that was in 2008. And all the news right now, if you haven't noticed, is talking about the impending market crash. So, hey, if you want to take out a cheap insurance policy, that could be interesting. So let's say that's a $300. I mean, it depends on how big your portfolio is. You can go ahead and decide how much you want to hedge yourself. Maybe you could do 10 contracts. This insurance policy would cost you $3,000. Now, keep in mind, if the market did crash by half, these are going to go up 20x, maybe even more. So you're going to be making some decent money on these puts. Now, if the market doesn't crash at all, and remember, we have 393 days till expiration, so maybe eventually it will. And maybe we can close these positions and make just a little bit. We would have to see about that. And no, it doesn't have to hit our strike to close the positions. This is just taking a cheap hedge. Maybe you can put in $300, $3,000. It really depends on the size of your portfolio and how much you want to buy insurance for. But keep in mind, we might lose that. But that's okay, because if you have a house and you buy homeowners insurance, every year you're paying $1,000 for your homeowners insurance. But nothing bad happens for this year. So you kind of lost $1,000. So it's kind of the same if you think about it. But this is just a cheap hedge. It's not going to be perfect. We don't necessarily need to hedge the entire exact dollar amount down to the very last penny in our portfolio, but we want to kind of think about it a little bit. So and just get something going. If you're a doomer and think that the markets are about to crash, which it could be, and eventually it will. So that's why I said go 393 days out. But you could buy a few of those positions. But just imagine if it crashed by half. So if the market price is $332 right now, if it just went all the way down to 170, just imagine. Well, we can just kind of get an idea of how much this is gonna go up. And this is a rough estimate, and it's just a generalization. Look at the money, the price for these. So it's about a 335. So these are selling for about $3,700, $3,900. So that's right around a 15x right there. Because this is currently is $300. So if it does crash by half, I'm saying, and so all of a sudden 170 is actually at the money, well, we're going to make some pretty good money on that. I mean, if we want to just go ahead and do the math on it, we could. So say $300 times about 12x is about 36. I think that would probably be pretty good. Probably the IV is going to be a lot higher, so it could be even more. But I think it's about a 12, 13x. We can just go ahead and say that to keep it easy. So if we put in 10 of these contracts, a total of $3,000, we could say it could do 12x on this put if the markets just did lose 50%. So we would make some money. We'd make about 36,000. Well, it'd go up to about 36,000 on that. So you guys can think about how much you want to buy and whatnot. But another cheaper one is actually Dow Jones. If we take a look at this, we could go way out about 337 days, just way out of the money put. Look, this one, the $100 is only costs $30 right now. Well, 0.3 is the last, so we would probably go ahead and change the limit order over there because we're not in a rush to pick these up. Might as well just get it cheap as possible. So for $30, we could get a bunch of these contracts. And then if it just did crash a lot, these are just going to skyrocket. I would assume it would go up by 10 to 20x. If the IV just shoots way up, I mean, it could be more. So just keep that in mind, guys. You can get really cheap insurance policies, but just keep in mind you might lose that money. But that's the point of insurance. The point of insurance is to lose the money if nothing bad happens. So just kind of keep that in mind, guys. Anyways, let's go ahead and move on from the pending market crash here. But I think I might go ahead and pick some of those up because it's cheap and you might as well. And they would be up a lot right now if we had done that before this dip. So even you can, sell those off after the dip if it makes sense, or you can keep them long term. That's really going to be something for you to decide, but I'll probably be looking into that more. That's just one way we can kind of get prepared for what's going on. But anyways, so my portfolio is down 17,000 today. It's not so bad. It was down a lot. It was down 40 at one time, so it's not so bad. It actually came back up a lot, and I think it's coming back up as we speak in the after hours. But today I got the Amd Condor, so if you were on the live stream, you would have seen me pick up this Condor. It's not doing all that well right now, but we need to give it, I think it's down like 18%, but we need to give it some time to mature around the $90 for AMD. I think it would be more interesting in between these two sells. But if you guys don't know what Condor is, go ahead and check it out on the live stream that we did today. It is on my YouTube, so you can skip to the part where we were talking about doing this Condor. And also the Iron Condors, we were thinking about doing one of those as well. But anyways, I went ahead and closed the SPE because it's losing money. It was down like 60%, so I had to go ahead and close it because I don't know how much further the markets are going to crash. But we can always open it back up, kind of like a delayed roll. SMH, I went ahead and took the profit about 30%, I think. I went ahead and closed the last position and took profit about 30% because if it does fall further, I can just buy back cheaper. And I don't want to take a risk of this going from plus 30 down to -5 or something like that because then I'll feel bad. So I might as well just take the profit at 30%. Print, I bought 25 shares. Just want to average into that. We're actually going to be discussing that one today. It is officially on the watch list as of now. I picked a dollar cost average, another ARC, G, and Palantir position. And here are some of the ones that did not get filled, but it was another Amazon Condor and an O Condor, which could be pretty interesting. I want to go ahead and take a look at that more later. But you guys can check that out and check out the Excel master list of the positions that we're adding in. We're up $3,200 still, even though we're closing out some for a loss over the past couple of weeks. So we're doing pretty good. And remember, the working capital we're using is only around $12,000 to $16,000 for our options as of right now. So we're doing pretty good. Even though the markets are dipping, it's not bad because we're consistently taking the profits. on those positions. But nevertheless, let's go ahead and move on to what I'm going to be adding to the watch list. Well, the first one is going to be PRNT. Print. This is a 3D printing ETF, and it is actually advised by the ARK Invest. Now, 3D printing is obviously really popular as of late, and I don't see that slowing down at all. It's only going to pick up for so many different things, and really the list is too long to get into. But I'm pretty sure you guys have a pretty good idea that 3D printing is going to be on the up and up. But if you take a look at the graph, I went ahead and set the target price at around $55. I think that should be pretty easy in around 3 to 5 months. It's taken a really big dip, so I'm excited about this. I put 3 buy zones because I'm just going to dollar cost average common shares all the way down if necessary. I already got 25, which is not that much, but again, I'm not in any rush because I'd prefer it to be cheaper, to be honest with you. But anything less than $35. Oh, I think I need to adjust that around 43 actually. But $35 works as well if we can get that low. That was actually going to be my cut line. But yeah, I'll update that soon. So what it should say is less than $45. I would say just go ahead and start dollar cost averaging that in. Risk is a 3. I don't think this is inherently super risky. But I would dollar cost average it just to be safe. Just go with the comments. And this is a long-term hold position for me. And then I want to move on lastly to my bull case for Tesla. Tesla has dipped, and it hasn't really dipped so much, but it was up to around $900, and now it's back to $787 actually. So anything less than $800, I think go ahead and add money to this. If it's too expensive for you guys, you could buy ARK-K, because that's the biggest holding in ARK-K is Tesla. And I watched an interview with Kathy Woods yesterday, and she's making a case for why she's buying up Tesla during this dip. So I was thinking, well, isn't Tesla so expensive? There's so many bears out there. Should I really buy more? I already have 100 shares I'm selling covered calls on, and I don't want to sell it. I want to keep them. But since it's dipped down below 800, I'm starting to consider things. Well, and I looked into it. And my bull case specifically is not just because Queen Kathy is buying more Tesla and adding it to ARK-K, but specifically because the Model Y long range is about to come out. A possible Model 2 priced at $25,000, which Musk has been talking about for a while now. But it seems like this might be the Model 2 sedan. It's kind of like a hatchback. Which is kind of cool, but this is going to be key because in China, this is going to be immensely popular. Take it for somebody that has lived in China for a decade. Recently, walking down the street or driving or taking taxis somewhere in Shanghai, I see a Model 3, it seems like every 15 seconds drive past me. They are immensely popular and they are everywhere. But not just because of the Model 2, but also because of the autonomous semis are also going to be coming out. Also, the ride sharing seems like all of these companies are pushing towards less individual ownership of cars and more towards ride sharing, or just imagine the autonomous robo-taxis that are supposed to come out. Eventually it will. Now, I'm not saying that all of these things are going to come into fruition tomorrow or next week or next month, but eventually it will. So I don't think there's any reason not to be adding money to this Tesla, or ARK-K if you want. You could do Tesla Leaps, you could do comments, you could do ARK-K comments, ARK-K Leaps, which I'm doing pretty much all of those. And it's I feel a little bit too exposed to Tesla, but overall I think it's going to pay off in the long term, and it always has. And I feel much better to know that ARK Invest is adding it to their Tesla position as well. But not only those things, but don't forget that Tesla is supposed to be entering the Indian market, which is probably going to be pretty big and push the stock price up. Also, don't forget they made like $700 million from buying Bitcoin a couple of weeks ago, which was more money than they made like all year selling their cars. So, all of those things said, I think Tesla can easily get to $13.50. Now, I think it's probably going to take till the end of the year, but I don't see any reason why it wouldn't. If Tesla is less than $800, I will be adding little by little to no matter if it's ARK or Tesla stock. Risk I put as a 4 because it is pretty high and there's a lot of bears out there, but maybe I will lower that to a 3 if it does pass $1,000. We'll see though. Or if one of these things does start rolling out that we were talking about. But I give it a 5 to 10 months. Like I said, end of year, I think it should have no problem hitting 1350. So if I were you, for me personally, I'm just going to be adding some money into these. But anyways, guys, let me know if you agree or disagree with my Tesla. Probably there's a lot of people that disagree with that, but it doesn't matter. It's all good. Join our Discord and we can have really good discussions like this. So it's there's a lot of good things to come in the future. Remember, guys, don't feel too bad if you're down a little bit of money today. But remember, on the graph, it wasn't all that bad anyways. This dip, I mean, just down a little bit. And overall, those things are pretty healthy. So anyways, guys, keep in mind the risk is from 1 to 5. 1 is the least risky, 5 is the most risky, and 5 probably should be the least amount of money that we're putting into these plays. Anyways, guys, don't forget to check out the links in the description for the Webull. Go ahead and get a Webull. You can trade with us, or you can just do your research on Webull. And also follow me on Twitter for the live trades, the Discord. And don't forget, guys, I do the one-on-one coaching. So if you have no idea what I'm talking about, or if I'm talking way too fast for you, or if you're just a beginner in options or stock trading, you can go ahead and email me on prostockadvice.com/contact, and we can get in touch for a one-on-one. All right, guys, thanks so much. I will see you on the other side. Peace.